weekend. Ira Epstein with your weekend edition of your Metal Market Wrap-Up, and this is for Sunday, the 3rd of April, 2022. As you can see, the boards have cleared behind me. These are just settlement prices. At 2 o'clock on Sunday, the vendors clear the boards. So this is where we're at. Now, in this edition, on Sundays or Saturdays, I put out weekly charts. We're going to look at the bigger picture and try to get an idea. Daily picture is one thing. We do that every day, basically Monday through Thursday, sometimes on a Friday morning, but that's about it. So let's get to the weekly. First off, notice how the market is fighting here against the upper Bollinger Band. Now, what this market had done is so important. If you and I come back, and I just want to prove a point here, I'm going to bring it right like that. For a period of time from 2016, you started hitting the 18-week moving average. You kept hitting it, staying within the confines in a narrow range. Late 2019, the market got up for the first time over the upper Bollinger Band and stayed there, and then it became a pattern of not getting back to this key moving average, getting over that, and then we started a correction. This was the beginning, and I'll come right over here, on February 26th, when the market made its run for the Bollinger Band. It hit it here. That number was, the 18-week average, 1715.60 to 1714.90. So that's February of 2021, a year ago, this past February. As I look at the chart action, it starts going pretty much against this. Back and forth. You get the market into 2022 very shortly. By the way, do you notice how it's just going there? It's replicating this area here. That's what's going on. You had the run-up, you're replicating, and now the market's back here, and it's going to deal with the Ukrainian situation, obviously. So you get a bounce, big one, the market pulls right back into the band. Why? 95% of the time you will stay within the band. What the market's really done is now the market is giving you the new base zone. That's what I think it's doing. I don't expect it to break under 1684.30 and start another move down to these numbers. Rather, what I think we've done is we've respected just what it did here, and now we're going sideways again, and buyers will probably line up into the 1818 level. Now, you're going to say, hey, there's war, there's inflation, may not get there. I'm not arguing that. I'm saying I think this is acting as another base area. I am not saying you ever buy a Bollinger Band either. In fact, the opposite. You will never find me telling you to buy an upper Bollinger Band. Even if the market becomes embedded, where it locks in, where you get the red and the blue over 80. If you want proof of that, take your cursor up here, go to my course, the Enhanced Bollinger Bands. It'll show you just what I'm saying, and you'll learn a lot. This is where the pros are taking money off the table, not going into the market against the Bollinger Band, in my opinion. When I look at gold on a weekly close-only chart, you can also see how you're pulling back there. Now we get to the weekly bar chart, the individual parts of it. Well, my gosh, look at how the market's pulling back. And what do we have? A downtrend. Why is it a downtrend? Lower highs, lower lows. This week's low of 1888.30 certainly took out 1895.20. The market's in a downtrend. To negate the downtrend, you got to get back over 1967.20, but that would not create an uptrend. You'd still have a lower low and then a higher high. So just based on the concept of what a downtrend is, and the basic definition by most analysts is lower highs, lower lows, you have that. When we look at moving averages, where's a likely target? Right back in to all this. If it continues to break 1857.10, maybe even the 100-day, but generally it's the 18-week. I said the 18-week that'll find the support. Where's the resistance? The Bollinger Band. You got over it for 1, 2, 3, 4 weeks in a row. You rarely stay beyond 5. You didn't do that. And now you're pulling back. That's what I teach. This is all part of what I teach in my regular charting course in this, and you learn how to play with that. So if you get these markets going like that, you got to say to yourself, what are my odds up when the market's up there of having more than 5 weeks in a row on an upper Bollinger Band? If you have no other tool, It's one of them I teach. Use your head. Maybe you put out a call. Write a call against it. Take in some money if you're wrong. There's many strategies you can employ. But that's how I teach what you do there. You play the percentages. Now you get over and momentum is down. So here's what I have. I have a market that's in a downtrend, the simplistic way, lower highs, lower lows. I don't think you can argue momentum is pointing down. The bias is up because anytime that you're over an 18-week average, the bias is up. When you're under it, the bias is down. It's a filter on the swing line, which tells me this is a contra-trend break. That's how I define it. Contra-trend, downtrend that should culminate and find support around the 1857 level. The gold-silver ratio still is down here, which means on the bigger picture, silver still looks pretty interesting that yes, it's losing a bit to the gold, but the bigger picture is silver can gain on it until you're back over that number. And like the gold market, silver is in a downtrend. On the weekly chart, lower highs, lower lows, momentum down, but bias up. Unlike the gold, where the 100-week average is under the 18-week, it's above it. So key supports begins right here, 24.20 to 23.68.70. That's not a buying mode. Generally, you're looking for a buying mode to not just get to a support zone, but you want to see an uptrend or momentum turn up, something with it. You have none of that on this chart at this point in time, but you also don't have a reason to be short. The copper market tried on Friday to turn its trend back up. Now it's got, with an outside week up, higher lows, higher highs, right into the upper band. Staying over that upper Bollinger Band, I'm going to repeat, you want to take that course. Move your cursor up here, it'll take you right there. Look for that not to occur. Now, if you take out this week's low at any point, I think you're going to get back into the 450 area. The odds favor that. So if you take out the low, the only way I'd say I'm wrong is after it takes it out, it should not take out this week's high again. If it doesn't take it out, there's no reason it can't just keep moving, chopping against that and trying to churn to even higher prices. Copper has a phenomenal story of lack of supply and lack of future supply coming at it. Now, yes, the argument against that is that the world is concerned that all this inflation we're going to get is going to cause central banks to raise interest rates and potentially put many economies into a recession, less demand for copper. I get it. I see the two forces fighting. In the platinum market, this has been one ugly chart. You know, two main exports out of Russia are platinum and palladium. And this is a bear market by every stretch. Lower highs, lower lows, momentum down, bias down. So until this market gets now up and over 1,049.60, the bears are in control. There'll probably be sellers showing up at the 10,005 level, and they're looking for lower prices. Could be the 935, the 200-week moving average down to the lower band. Surprise. In the dollar, your number one, momentum is still pointing up, not embedded. Number two, the trend is up. The bias is up. You hit the upper Bollinger Band. You got over it for 1 week, 2 weeks. Last week, if you take a look, you closed right over it. And this week, you finished under it. That's about what you should do. But it's still very bullish. Support lies all the way down in the market to 96.65. That's pretty far away from here. You're talking 200 points. I would expect it to show up earlier than that. We'll see if the market can embed or if the red line starts turning down and gives you momentum down, which would ideally then play into the dollar dropping down. However, what you have is a situation in the dollar where you are now fighting hard, looking in this market saying, what is the Fed going to do? The analysts and the Fed presidents that are coming out, even the doves are now saying, go with interest rate hikes. I think everybody's lining up. Now, the word's not true, every one of them, but most are lining up for a 50 basis point hike at the next meeting. They're talking what they would do the next meeting after that, obviously. They've joined the James Bullard Club, get ahead and get in front of all this. That could happen. On the other hand, what could happen too is maybe because the market is priced in these rates, we start seeing the economy flutter before the Fed does anything, and the market is doing the Fed's job for it. You don't get all the hikes you think. My bet is with what I just said. The market is very efficient. It'll do the Fed's job to a large degree for it, and the reactions happen not from the Fed then, but from what the market thinks the Fed is going to be doing. We talk about that at length at Linn and Associates. If you haven't seen all the research we write on these markets, cash markets, option strategies, future spreading strategies, volume, open interest, cash markets, you want to see it across the spectrum. We have our own analyst even that does the weather, believe it or not, for the growing season. They're with us year round, and they've been there as long as I've been with Linn and Associates. So to get a free trial is pretty simple. You can either call our staff, you can go to our website. On the top left is free trials. And remember, if you want to learn about the enhanced Bollinger Band, it'll take you to the website. Move your cursor up right here. You'll see the icon, click on it, and away you go. With that, I'm Ira Epstein. I'll see you tomorrow morning. Take care.